This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. And you also know that Micron has earnings after the close on Wednesday, which is important. And that's because everyone's long. And if they do anything to just meet or blow out expectations that are already priced in, then the market can have some shake and bake. And we've got some levels that are becoming more problematic. For example, this option flow deal has been favoring concentration risk. This is a chart by Apollo. Market is getting a little worried about tech. You can see massive outlier here as it relates to Nasdaq volatility relative to the S&P 500. It has spiked to its highest level in many years. So this jump reflects investors demanding far more protection on AI names than on the broad market. This is why the broad market isn't doing much. Here's our returns for the year if you strip out the AI contingency. Now, this was when we had a big move, obviously, from the March 30th lows, ceasefire, and then this dispersion unwind for the first week to 10 days before another not ceasefire, but MOU, Memorandum of Understanding, which of course is on again, off again, on again, off again. Anyway, the point is oil came down and the markets recovered that dispersion unwind. And here we are today. But the day is still a situation where market fragility builds underneath the surface also as we are thinly positive gamma. So they're still buying the dips and selling the rips, but at some point they will switch and we'll go negative gamma, and that's where we can have a shake and bake, and we have the market moving higher above 7,500, and that's all well and dandy. I think we're actually going to probably make one attempt higher into, remember the line in the sand that I gave you? Okay, do you remember it's 75.85? So anyway, I still have 75.85 as market push right there, 75.84.41 specifically. Now, can we get to 77.26, which is a fib level? Sure. Can the Qs get to 765? Sure. Are we opening up very strongly today? Yup. But I don't think we're going to go too far after, because this week anyway, after Micron earnings. And then we have PCE on Thursday. And then we have JP Morgan. Remember that lovely collar of size that is basically rolled. That happens on the 30th. The Qs, we're opening up above the close last week, right here, literally. The close was 740.62. You can see it right here. And the open this morning was 742. It hit a low of 740.43 to close it, and now it's pushing higher. So that's your line in the sand. It was also last month's, literally May's close, 738.39 area. That's what you need to use as your kind of marker, 740.62 if it gets back inside for the Qs. But right now, they're not in the mood to do that. Anyway, be careful. We come back into 740.62 for QQQ. We get some shake and bake. Monday gap up, wouldn't surprise me at all if it gets sold. Qs coming back into 740.62. I think this pop can be dropped. If yields spike, though, what happens to the market? It should weaken. SPX should come on down. Dollar should get a little bid. And look at this, is not this, as I mentioned, we've got to hold this level. Otherwise, Qs are going to come right back inside 740, and they just did. So when I mentioned it, it was 743, 744 area. And I said, if this is your short trigger, if it gets back inside 740.62, and it just dropped $2, a total of 5 from when I warned. But my point is, it's just not holding up, is it? Nope. That looks very much like the pop is getting dropped. Yesterday was Monday, and we had a little pop up, and I said it wouldn't surprise me if we had a pop and drop and gave a specific level, not a permanent one. I'm not calling the top. I'm just saying I had a little inkling. Monday nights, after all kinds of macro geopolitical risk on a weekend that gets ignored, is typically futures manipulation that then gets sold. Anyway, you got the 740.62 QQQ short was what I said. If we come back inside it, and at the time it was printing 743, it actually hit a high of 745.45, but I said if it comes inside the close yesterday of last week, which was 740.62, that's a good short trigger. So where did we close yesterday? Well, we closed at basically 738. That is what we needed. And what do we have this morning? Well, it's printing 716. So from that 740.62 to 716.65, it's not a bad little chase short, but we need more to confirm. So we would need to take out this 710, come right back down to 700. You know how this game plays. All right, so we're kind of in no man's land here. Micron earnings Wednesday after the close, giving some folks a little bit of shake and bake worries, apparently. So we've got a chart here, which is kind of ironic. Colleague of mine posted this, and I love it because it kind of shows you. We came up into Marvell earnings, had a little shake and bake. Avgo earnings had another little shake and bake, but that was very much part of dispersion unwind. And I had that hunch, remember, on June 1st. Anyway, you can see that Micron is giving some trepidation. Now, of course, most of this is because Kospi had a gap down over in South Korea of 10%. And that can, of course, trigger some leverage unwind over here. We're going to go right down to QQQ 682.77. So that's really the level that I'm looking for with an overshoot to 673. So that would be left shoulder, head, right shoulder. Now, head and shoulders can be reversal, trend reversal, and everything, signals. They can also be continuation. Right now we're in distribution. We've got the leveraged unwind going on with semis, specifically South Korean semis. But I'm just saying that would be my baseline bet is we come on back down and fill this level 682, 677 for QQQ. Right now, I just had the QQQ. That gap up yesterday, I had an inkling it was going to get sold off just for a pop and drop. We're now having that significant drop. Semis did exactly that fake breakout fast failure. Boom, we're coming back in. We have a short-term, I would say, short-term profit taking on shorts. Bigger picture is, however, we do have Micron earnings tomorrow. A little bit of pull down in the semis has happened either post big earnings reports or soon after. Well, that post and soon after are the same thing, aren't they? All right, I'm talking this, right? Avgo. Remember this Avgo? So this was actually June 3rd, but I had seen the EWY on June 1st. And I said, this is a pop and drop. I think we're there. And we rolled over. We had a nice little 19% pullback, and then it got defended again. This is called the double high. And then EWY is basically doing that pop on a Monday and a drop right back down into 194.5. So Avgo then came on the Wednesday and did a huge bearish engulfing. Remember that? Sienna too. But the point is, they got the treatment where there is an unwind in big golden child now turns wild child, and it's in distribution. Semis are suffering as a result. We had that dispersion for 1 week, and then we have this dispersion. Maybe it's only for a week, but right now this is it. Pop and drop. That was a Monday warning. And I didn't actually warn on, I warned here. So semis went up until Avgo, and then they went here. So anyway, here we are sitting right back at 624.62 for SMH. And my warning is that I think we could get a little bit more. But we need to break 620. We're at 626 for SMH. We're down 6.45%. In order for this to form a bearish engulfing, we need to take out 616. So SMH 616 for this week. And the Qs, let's take a look. Okay, we came inside perfectly. We have also tagged 725.66 perfectly from that 740.62. And now we're sitting on the Keltner channel, but on the daily, we're absolutely nowhere. That does not look good. And that's a bearish engulfing. Even if we moved up into 725, it's still a bearish candle for the week. Even if we were to move up on profit taking, I don't see it right now, but even if we were to. Shake and bake, two-way market. Micron's only to the 8-day, down 11-12%, 8-day EMA. It has earnings tomorrow night, and many bulls. Many bulls. I showed you that yesterday, some massive bulls on that tape. So maybe they're rethinking, they're buying stocks, hand over fist on margin, borrowing, selling pensions, etc. in South Korea and Taiwan. Busy, because it's gone up 100%. So they think it's to infinity and beyond. No, Antonio, this is not the correction for July, August. This is just the chop, the gap up, fail, And then that's the short trigger. We've already come back in, formed a bearish engulfing. We can still have a little bounce, maybe even post Micron, but the chop into 4th of July, I don't think it's really a rollover candidate starting today. I think it comes in after the 4th of July. So I think they're going to still try and keep the market in play. I see big distribution. So you can see literally, if I do this from May, what's that level? 711. What did we print so far today? 713. That's the high. We have been here 1, 2, 3, 4, 5, 6, 7 weeks. It has been 7 weeks since the last time we were at the 711. That's what I mean by it's the chop. I don't think they're going to let the market fall apart until after 4th of July. We have that pop and drop, and it's getting defended. Trying anyway. Look where it got defended. Right up into resistance at 722.78 for QQQ. All right, which is also the 21-day EMA. Look at that tag of 194.5. Again, they're buying, but big picture, doesn't look like it's done. We had a nice little pullback to support 194.5 on the daily, 194.5 on the weekly, and we just sat right back on top of 722 QQQ. Where have we been? 1, 2, 3, 4, 5, 6, 7 weeks of sideways in the markets. So usually you get the chop before the drop. Sometimes it forms a nice reversal pattern that gets bought, and then that head and shoulders creates a continuation pattern. We're way early for that. We're still in the chop period. Firmly, I think the next 2 weeks into the chop period. All right, what do we have pulling down the memory stocks? Just, again, 8-day. Can we go for 21? That's literally where you'd put the next target lower. 1861, if you're looking for a price target, potential this week, since we're at 2052 for SNDK, potential target for this week would be 1861. We're having a bounce. And for Micron, it would be 1010 on the downside. However, most are bullish. Most folks are positioned very bullish into this print. Big expected move of like 12% or something. I'm sure Arjuna has the exact. Little gap down on lots and lots of semi-memory plays, but they have this kinetic action, right? Breakout for EWY and then 2 weeks of breakdown. Breakout and then basically 2 weeks of digestion right above that 10-week. Breakout. We could have 2 weeks, right? It's not just usually a one and done, but we'll see what happens. Long story short, the trend hasn't broken yet. DRAM price target of 66.17 still in view. Wouldn't be surprising at all this week or next week for these 21-day tags to actually work on these high flyers for semis.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.